Hey, what's going on? Today is the 28th of March, 2024. It's Thursday, and tomorrow the market will be closed for Good Friday slash Easter. So today is basically effectively a Friday. And let's see, I guess the first thing, a couple days ago, I think it was on the 26th, so 2 days ago, I closed out this triangle hedge, and this is now a free hedge here. And if we go to the curve, got it all set up already. And yeah, so I want the market to tank basically. If the market tanks like 18% or something and closes down here, I could make $2,300 at expiration. And if it crashed there today, I'd be up $700. Otherwise, it's got to come down here to 4,800 before I really start making money. I'd be up about $200, but even then, that's like a 10% correction. So at this rate, I don't even think I'll be surprised to get a 5% correction, right? Because back to this thing, 1.5 years on average, we get a 5% correction. And last year, we had a 10% correction, like 11%. And we're only like 8 months into this 1.1 years. So roughly August of 2024 would be a year. And yeah, so who knows? We might get it sooner, we might get it later. But right now, everything is just grinding higher. And the odds that we get a 15 or 20% crash is super low, considering in 2022, we had, was it 20%? I think it was over 20%. So we're like years away from that on average, right? Anyways, this hedge is now in effect. So any move down is going to gain me back money, and anything beyond, 5 or 10% move is definitely going to make me money. So that'd be sweet. This account is still overall down because of these extra hedges I was putting on. I guess let's wrap this up real quick. So on the spreadsheet, line 17 here is what got closed out. So I closed out this single short put instead of the long double short puts, right? And so that was 48 days, collected 186.08 after fees. And if I combine these three together here, lines 17, 16, and 15. All right, there we go. For some reason I had a number plugged in a cell. So these three combined, which is the 112-4 over here, if I let everything expire worthless, it would be $50.83 I've locked in as a profit. And obviously if that hedge starts to kick in, I could make a lot more than that. But yeah, that's where I'm sitting now. I was in that trade, or that leg of the trade was 48 days, and I still have another like 50 remaining. The market went up about $200, and that's a winner, which turns these two into free hedges. So if we go back here, I need to clean up some other trades. Mainly this short call is costing me some money and costing me a lot of buying power. My buying power is getting down there 700 or less. So I need to free something up there. And the one thing I do agree pretty strongly with Tasty Trade on is once you get down to the 20-day range, 21 days, you need to do something with those positions, because you have way too much exposure to just the underlying stock price. In theory, still has a 62% chance of profit. I can't really risk it. If I leave this over the weekend and then we gap up and this is in the money on Monday, I'm going to be down. I'll lose $100 in a day, So I needed to close this out today, and then probably even this one, I got 50% in just 8 days. And then this one is the hedge, my brilliant idea from 2 months ago. And at this point, it's lost 95% of its value. So I'm just going to hang on to it. That's only, 300 points away from being in the money. So that potentially could get some money back if we got a 5% correction, give or take. All right, let's gonna close out this one here, the call, and this will free up the most buying power. 38.50, I'll just go for the middle. Okay, so I got that to close out here, and you can see March 26th, this was the trade that I just talked about. But back to this trade, I closed it out here for 38.75, which was one tick above the mid price. And line 19 is what we're looking at. And I was in this trade 28 days, and I ultimately lost $92.54 on a trade for negative 86.7% of the max profit. So that sucks. I mean, I've even went down, but the problem is the price went up 150 bucks. So that's officially the first realized loser in all of these trades, technically speaking. But I definitely have a couple of my brilliant hedges out here that will ultimately be losers. So at this point, I'm just trying to sell enough credit against those hedges that I make the money back. So, all right, let's get back to here. You can see right here, this is now closed out. And while I'm at it, I'm going to close this one out. I mean, it's a good thing I kept rolling these things up, right? I mean, I lost 92 bucks on that call, but at least this I gained 52. So net, I only lost like 40 to 50 bucks instead of 90, right? So this is open 8 days, I'm already at 50%, plus it's at 22 days. So I'm just going to close this sucker out and take the money while I can. Okay, I got that one closed out too. I paid $10.25 to close it down. So line 22 down here, 8 days in the trade. Ultimately, I made just under $50 profit, and that's 50% of the max. And yeah, market went up 30 bucks in the last 8 days. So that turned into a winner. I think that takes care of those things. So I have these left at 22 days, but these are, this is a free hedge, so I'm just going to leave that. I mean, highly unlikely this comes into play. That's way down at 45.50. That's 800 points away. This one could come into play if we would ever get a sell-off of more than like 1%. This one I'm done messing with. I'm basically just trying to sell puts against this stuff. So, and then this is a free hedge too. All right, go back here to the positions tab, and I guess for now I don't think I'm going to open anything until, let's check out these other ones. The SPY one expires today finally. It's going to be totally worthless, and that was a free hedge, so it doesn't matter. This XSP, this is almost close enough. I just want to close this out and move on. It's been sitting around 25 cents seemingly for 2 weeks. I don't know. I mean, maybe not that long, but it seems like it's been a while. So it's like, is it worth it to hang on for 3 more cents? Let's take a look at the spreadsheet here. All right, so that's the 112-5, which is right here. And 23 cents is the current mid price. This has been open 41 days. Yeah, I've been trying to close these at like 30 days to get my 50 bucks. I don't know if that makes sense or not, but that's kind of what they've been in the past. So this is a solid 10 days past that. And so if I put in 23 cents, if I close this at 23, come over here, that's 60% of the max profit. And if I combine it with that one below it, they gave me $48 in profit instead of I'm shooting for 50. But I think I'm just going to take it because, again, the market, I don't know what's going to cause it to sell off, but it's just, man, we're up like 30% with no sizable correction. So I'm just going to take this off. It's close enough, a couple bucks. It's not worth the risk. And that'll give me another free hedge. So let's come down here. I'm going to edit this order. Probably won't even get 23. Okay, just as I suspected, I didn't get to 23. I had to go one more penny to the 24. So instead of 48 bucks, it's going to be like 47. So down here, row 10, you know, that I just closed that short put spread, is in at 41 days, and ultimately got $72.90 for 58% of the max profit. You know, IV went down since I opened it, and the price went up since I opened it. $22, which is 220 if you're on the big SPX. So that's a winner, which turns the one below it into a free hedge now. And all said and done, I get $46.08 locked in for that trade. And if the hedge kicks in, great. If not, that's just part of the trade. Okay, back to the positions tab, and this is now the 1122-5 free hedge. And this is going to be out there for 85 days, which is great. It's down there at 490, which is 4,900, which would be like a 400 point move in the market down. And what would that be? Let's say 5,300, oops, 400 divided by 5310 or whatever. I mean, that's a 7.5% move down. So that's not likely to kick in, but I guess you never know. Okay, with all of that being said, I need to open a position here in this futures account because now I have $1,750 in buying power, which is almost all of it. And this says 0%, but that's not obviously right. But all these hedges combined is only using, like, what is that? About $100 in buying power. So, to my surprise, I'll be putting on another bullish, 112. I was looking at doing just a 111 maybe to be a little more conservative, but you'll see here when I go to open this. So I'm going to the 113 days and come here, 25. Gonna buy that one 50 points wide and then come out roughly here and then sell two of those. That gives me 98% pop, and extrinsic value is 149, which is what I can make if the market stays the same or goes up. And then the max profit, which would be in the trap, would be about 400 bucks. But look at this, opening this trade, getting credit, getting $149 credit, or actually, what's this consider? I don't know. Getting $149 credit here, if you look at the curve, just this trade. So, right, this is what I'm looking at. If it goes up, it's at 148 to the moon, to the tail, whatever it's called, and then down here in the trap could be 400. But with all those other hedges on, this actually opens up $30 in buying power. It gets me $30 in credit instead of using credit, which is crazy. So I'm going to open this trade, and it's still going to be sitting at 1,700 bucks. I don't know I mean, yeah, I'm just going to go with it for now. I mean, that's crazy. It just goes to show that I guess that hedge that I've put on isn't totally worthless, at least for the next 22 days, right? This hedge over here, if I turn all these on, but I have a long put at 5,000, right? So that's 22 days. So for the next 3 weeks, that allows me to, you know, put on this trade basically risk free. You know, down here, if it comes to 4,800 with all these on, I would still be up $100. So that's a 5% move or something, right? And I would still be gaining money in the next 3 weeks. So I guess once that goes away in the next 3 weeks, I will need to reassess and see what's going on. But yeah, that's just kind of crazy. So anyways, I'm going to go back and open this trade. And yeah, it's just more of the 1-1-2s, the bear traps, whatever you want to call them. It's just crazy to me that, I mean, literally at all-time highs, we've gone up, what is this, almost 30% now on this other screen. This says 29.15% since October with no sizable correction, which is crazy. It just feels silly selling this up here, but I guess this is how it works, right? Supposedly this is how people are making money. So it just seems weird opening a long trade at the very top, you know, all-time highs. But anyways, enough rambling. I'm going to close or open this trade. I need to remove this leg though because Tasty Trade doesn't support the futures. So multiple legs on a futures, well, more than 2 legs on a futures trade. So anyways, 45.50 is where I'm going to sell to. So these two, I'm just going to buy futures, and then 45.50, going to sell to, and okay, got those orders filled, and these bottom 3 rows are the new trade here at 112-5. And yeah, pretty straightforward stuff, just more of the same, you know. The 2 short puts are at the 7 delta, and then 25 and 22 for the long put spread. I split them out again just in case I want to do the triangle hedge again. And then, you know, the overall trade had a 98% chance of probability of profit at open, and IB ranks 8.4, and then the market price was 5364.75 for this expiration. This expiration goes into the new futures cycle, so that's why it's higher. But I still don't quite understand why the futures are higher in different months, but anyways, there's that. Go to the position tab, and sure enough, there's now 2, right? This is M4 versus U4, and so the M4, I'm probably done trading here. I'm definitely done trying to compensate for these 22-day positions. This 50-day, I might sell a put against this if we would ever get like a down day or a couple down days in a row, because this still has these 3 hedges. Granted, they're really far away at 3,900, but yeah, so maybe we'll see. I don't know. I mean, you can see that my buying power is still the same, 1780. I mean, it freed up more, right? Just like it said. So this new position is down here, 112-5, and yeah, cost 145.75, or that was the credit that I received. And if we come here to the curve, zoom out, And sure enough, 145.75 is the max profit at expiration, and 395.75 would be the max profit at expiration in the bear trap. So there we go. I really wish you could combine all the things and all the thingies, M4, U4, whatever, right? So then you could come here, go to the analysis tab, and see all the positions together. But anyways, this is what the M4 curve looks like. I mean, holy cow. If somehow the market starts going down, I'm going to start making bank in this one. Flash crash at, 10% would be getting me, I don't know, $1,000 or something. Who knows? But yeah, somehow goes down 20%. I'm going to be up $4,000. But yeah, good luck with that. Yeah, at this point, the market's just grinding higher, so I got to have some skin in the game. Once this hedge comes off in 3 weeks, I'm guessing that's going to really drag down my buying power. So probably not going to do anything. Let's see what would happen here if I close this. Oh, it claims the buying power would only go down by $121. That's crazy. Huh. So then what is keeping... I mean, how do I have these trades on for free? I guess this one. This one probably would... Let's see. No, 211. I don't know how this stuff works, man. It drives me crazy because when the market starts to go down, your buying power just spikes like crazy, even though, in my opinion, you'll have positions that are super far out of the money, but then all of a sudden they require like $2,000 in buying power, and it seems ridiculous. So, and then now I like literally have these trades on for almost free, right? I mean, my net lick is 1858 and I have available 1784. So it's only taking like $75 or something to open all of these trades on the orange, right? I don't get it. I mean, it's 1, 2, 3, 4, 5 different positions, which has like 10 different legs in it. So I don't get it. Whatever, man. I'm basically, I mean, in theory, that's like zero risk, right? I don't get it. I'm like risking $75 to make like a bunch of money. Whatever, man. I guess I don't care. That's great for me at this point. So this SPY will finally go away. XSP, I guess I'll wait till next week or something to open another trade. It seems silly to open another trade here today at the very peak of the market, but we were briefly down. The ES futures, S&P futures were briefly down like a whole $2 a few minutes ago, but now we're back up $1.50. So on the whole day. And I guess one final thing is I track, basically on a weekly basis right now, I track the profit and loss, right? So this is the monthly chart of the futures account, and right now it's down, obviously. I guess it's down 4% on the year or something like that. And no, that's month over month. Anyways, I'm down like $200, so I guess that's like 10%. Slowly gaining it back, but let's put in a new entry for today. So today's 3/28, and I'll call it 1858.11. And then the loss is 145.99. Almost no change since last week. So It's down 49 cents from last week. So P&L, this claims year to date with fees is negative 7%. Yep, but I'm gaining it back. I mean, at one point it's down almost 10% there. So whatever. This shows the opening net lick for the year was $2,015. And yeah, I'm down 145. So is that what that's dividing by? Yes, it is. All right, so I'm down 7.2% on the year in this account, and that's almost certainly because of all these stupid hedges I tried to put on. Especially my bright idea to do an aggressive hedge that lost me that $200 basically. So I'm slowly chipping that back, and let's do the same thing for this account. And I think this one's going to be all-time high. Oh, it dropped a little bit today, so maybe not. 2942.81. Oops, wrong column. Today's March 28. So 2942.82, 2942.82, 81, 2943.81. Oh my gosh, 2943.81. I'm just calling it. And look at that, it ticked up to 2947. This is ridiculous. 150.83. I usually do this after hours when the market's not moving. 47.81, 29, 47 point. All right, at least those are the same. All right, and look at that. When it turns green like this, that's the all-time high. So all-time high, 29.47.81, 29.47.81, and 150.83. So there you go. This account, this Divine Risk account, I've only been doing the 1122s, and which is the defined risk bear trap, and to my amazement the market has just gone up and I've made money. So that's the problem though, this one has only gone up, right? So or the market has only gone up, so that's why this account's doing good. It'll be interesting to see what happens, how much I lose when the market goes down, because the defined risk version of this bear trap is much closer to at the money than the naked version, the 112. Guess we'll see. But at this point, I have a whole bunch of free hedges, so I don't know. It's just crazy. I guess so far it's working, but also the market's just been going up. So everybody's a genius in a bull market, right? So we will find out once the market has a correction, whenever that's going to be, whether it's next week or 3, 4, 6 months from now, who knows. But all right, this is probably a longer video, and I've been interrupted a couple times here filming this thing, so I guess it's time for me to go. All right, thanks for tuning in, and I'll see you later.